Hi, Steve Walker here from Promise Money. Now, this is a general update to all of our YouTube subscribers, but it's specifically aimed at those who are involved in property investment, developers, landlords, etc. We're at the early part of 2024, and there's some exciting things happening, and I think there's lots of opportunities out there. So I just want to give you a flavour of what's happening in the market so you can decide if that's going to change what you're doing right now. I'm going to be following this with lots of other videos which are going to be more product specific across the whole range of products, you know, bridging, commercial finance, second charge loans, development finance, what have I missed out, buy-to-let, etc. So do make sure, if you're not already subscribed, do subscribe so that you get those. But here's where we are right now. The market's been depressed, we know that. Property prices have been low, lots of negative talk. That has now turned into really positive talk because we are at a low place. And I think that, and I'm not alone in this, is that we're going to see a big change in the market go over the next six to 8 months, I think. Big change in the market, but lenders are already making changes. They're already gearing up for it. So what do I mean by that? Well, first of all, rates are already coming down. So you'll have seen in the press that mortgage rates are coming down, but the other sectors are coming down too, and I'll talk to you about that in a moment. Talking to lenders, talking to developers, they all have an expectation that property prices are going to start rising towards the middle of this year, and that's going to be fueled by what's already happening now, but the rest of the world catching on. And the reason I think now is an important time is because I don't think the rest of the world has caught on, and that's because the press, the BBC, etc., they'll report on whatever comes out of NatWest and Halifax about what happened over the last 3 months. Oh, look, we've got a trend starting. I think the trend's already started. We've also got lenders relaxing criteria. So not only are rates coming down, which makes affordability better, means that loans you might not have been able to get previously, you can now get, or it means that you can get higher loans because the affordability is better and because rates are lower, but they're also relaxing on LTVs and in other areas, depending on the sector, but it's a more relaxed, positive approach to lending that we're seeing right now. And developers, well, they're starting to take the wraps off projects that they'd mothballed, and they're now getting cracking as well because they want to get the build in, because they can see what's coming around the corner and they want to get properties ready to go to market. So that's really positive. Now let's just talk about for a moment some specifics. So commercial mortgages, go back 6 months, best rates going on a 5-year fix, 7.5%. We're now seeing rates being quoted from 5.4% on commercial mortgages, and that's not a high street lender, that's a specialist lender. Okay, so that's really, really positive, and that would make a massive difference if you think about the affordability calculation that you'd be doing now compared to 7.5%. Massive difference. Bridging, residential bridging rates now back down towards 0.7%. Now that was probably 0.85, 0.95s, so big change there. Second charge rates down to around 6%. They were up in the 8s. Development finance, well, I think that's going to be a little bit slower to move, but it's already starting to move. But if you can pick up rates between 10 and 11% now on a tracker, that's a really good deal, because as the rates come down, which they're forecast to do, then the rate on your development will come down. So if you're on a tracker, so that's good too. And of course, the buy-to-let residential market, well, that's gone bonkers. Every lender's trying to undercut their neighbours or their competitors. So if you're thinking right now, what do I do? What I would say is start looking for opportunities, start seeing what's out there that you can pick up. You're probably already in that process. If you've been watching our videos previously, you're probably ahead of the curve on this, because I've been saying from last September onwards, start looking for properties now. But I really think now is the time. So start looking for those properties. And if you want to talk to somebody about whether it's commercial, bridging, development, secured loans, buy-to-let, residential, whatever it is, we have the experts in-house. If you want to find out more and do some research yourselves, then please do check out our YouTube channel. Hopefully there's a little link up there you can click on now, and that will take you to our YouTube channel, where there's specific videos on specific products, where if you need to self-educate, go ahead. That's what they're there for. Please go and learn as much as you can. And please, if you've not already subscribed to our channel, I'm going to be doing more videos which are more product specific, and I intend to do quite a lot of them over the coming months. So if you want to see those, do subscribe so that you'll get them. And if you want more information, you've got our YouTube channel, promisemoney.co.uk, and you've got our website, promisemoney.co.uk. So check out both of those, loads of information. But I'm confident there's more good stuff to come because we are in early part of 2024. I think there's more good stuff to come. I know for a start off that there are 3 new lenders lining up to come into the second charge market. Well, 3 lenders in one go into a small market like that, that's a massive impact. Good stuff happening. Look out for opportunities, and if we can help you, then do get in touch. Thanks a lot. Bye-bye.